Hey everybody, Laz here from the trading floor. A little bit of a midday update. We're seeing some selling pick up here, which is something we talked about earlier in the day. Market, when it goes into these types of trades, and again, you don't get these types of trades all that often, they can be very, very dangerous. They can go a lot further than you think. And I think stepping in front of this trade, trying to pick a bottom here, again, is just trying to catch a falling knife. And like I said, in an earlier video, someone once told me when the boat starts sinking, jump. This is not the kind of trade where you want to step in and try and be a hero. I think we really need to take a look at the S&Ps here. Again, you have time frame alignment on so many different stocks, indexes, breaking down, volume increasing. This is the type of tape you have to be very, very careful of. The market is making a statement. It's telling us something. If you're not listening, if you're not paying attention, it's going to cost you a lot of money. So with that, let's go here. Let's take a look here at the S&Ps. Again, this is what I mean by time frame alignment. This is a 60-minute chart. You can see our key moving averages have been basically down since this is back from the beginning of May, since we peaked in the S&Ps, and it has been just a bloodbath ever since. We can put the candlesticks back in, and you can see how we've just, again, starting to accelerate here to the downside, which is a sign to us that, we could be a day, possibly even a morning away from what could be a tradable low. So while it is a very difficult trade to step in front of, we are anticipating it sometime in the near term. And again, could be later today, could be tomorrow, could be the day after. We are probably not too far away from a tradable low. A tradable low could come in the form of an afternoon aggressive sell-off. A tradable low could come in the form of a big gap down tomorrow. Again, there's a lot of headline risk out there, so be very, very careful in what you do. I think a tactical approach here is the only approach. With the S&Ps and the broader indexes, breaking down, here's the daily chart, breaking down, continuing to ride under these averages. We don't really have any, level of support that I want to highlight until possibly the 130 area. That's like 1,300 in the S&Ps, possibly even sub 1,300. Usually, a market will come into support, will break support, and then it'll bounce back. So keep an eye on, the S&Ps around, 1290, 1280. 1,300 area. I think that's an area where a lot of traders are going to look to test the waters on the long side. And again, we're not there. That could be tomorrow or the day after. Another key stock we're watching, Apple. Obviously, Apple, the momentum starting to increase to the downside. Here's the daily chart under the averages. Candlesticks getting larger, volume increasing today on this downdraft. Again, not a lot of support in Apple till possibly even the 520 or even sub 520 mark. So another level we want to pay attention to going into tomorrow. Again, the traders that are prepared and tactical and strategic about what they're doing are the traders that are probably going to be profitable in this type of environment. We've seen this before. We've seen sell-offs before. This is not new to us. Again, knowing how to approach them. If shorting is not your forte and something you don't know how to do or not comfortable with, stay away from the trade. Wait for a better setup. Again, a better setup will come only with time. There's been a lot of damage done to a lot of different stocks, a lot of different indexes. We have Facebook on Friday. A lot of traders are sort of waiting on the sidelines to see what Facebook does to stimulate, maybe a little energy into the market, maybe put a little cash flow into the stock market, maybe get a tradable bounce from that. But that, again, is a trade, into tomorrow. So we'll take Facebook, as it comes, when it comes. It's going to be a very crowded trade. A lot of eyeballs. Everybody's going to be watching it. It's probably a trade me personally I'll stay away from. I generally try and stay away from the crowded trades unless, of course, it sets up intraday and there's just an unbelievable looking structure there that we can, identify, a good risk-reward scenario. But we'll talk about that one tomorrow. For today, again, I think staying on the short side is still the safer trade. If you are a trader that is, an active intraday trader, it's been a very good environment for you to step in and be shorting bounces off some of your execution time frames. Again, a planned trader, a strategic trader is a trader that's going to make money in these types of environments. And when volatility increases, if you're, if you have a good approach and a good tactic, it can be a very, very profitable trade because you are seeing, big range expansion in short pockets of time. And for, shorter term traders, the day traders in particular, this is an environment you look to thrive in. So if you're not thriving, think about what you're doing wrong, identify the mistakes. And as always, I'm Laz, and I'll talk to you later.